Good morning. Today we are going to start a new topic, that is share forfeiture account. Share forfeiture indirectly known as cancellation of shares. So simple that when the subscriber, that means the shareholder, purchase shares from any company, due to some of the reason company cancel the shares, and even the shareholder how much paid the money, company captured that money also. The company not at all refund that money to the shareholder. So that is known as the forfeiture account. Let's see that how to deal with that. So forfeiture account indirectly known as the cancellation of the shares. When the shareholder purchase or subscribe the shares from the company asks calls in the form of application money, allotment money, first call money, like that. So due to some of the reason, when the shareholder not paid any one of the call, allotment or any first call, that time company giving notice to the shareholder that your call money due already arises, please pay. Even though the person not paid, that time company cancel the shares, that is known as the share forfeiture account. Let's see that how the general entries of that share forfeiture account. Simple that when the company issuing shares, when the company receiving money, that time that all money company transferring to share capital. So if that money transferring to share capital, when that company cancelling that shares, we should get back that money from the share capital. Say example, if the application money rupees 3 of 200 shares, so that application money, how they have written that? See, journal entries was that first receiving entry, bank account debit to share application account, and again share application account debit to share capital. See that? Share capital. So that money ultimately where they have sent? Share capital. Exactly same in allotment also, in first call also. So when they have transferred that all money to the share capital, definitely when they are going to cancel it, I should get back that money from the share capital. When I am transferring to the share capital, how I have written that? To share capital I have written. So when I am getting back that money from that share capital again, what I should do? Share capital account debit. So that the journal entries for the forfeiture account is share capital account debit to forfeiture account. In this forfeiture account, the person how much paid off, and the money the person not paid, that is calls in arrear. Due to that the company cancelled his or her share, that amount will come here, calls in arrear. Let's see one question, small questions we have taken here. Let's see that how to deal with that. Birinder Limited forfeited 400 shares of 100 each, 60 called up. 60 called up, that means of what? How much company called up, that much of money already company transferred to share capital. So that much of money I should get back. So entry is that, first is that share capital account debit. See that? Share capital account debit. Share capital, how much I have sent to that? 400 shares into 60 I have called. How much I called, that much of journal entries I have written, and I have transferred to the share capital. So I should get back all. So 400 into 60, so amount is 24,000. I hope understood first part. 2. Share for forfeiture account. Now you find out that here how much share forfeiture. I told how much the person paid, that is known as the share forfeiture. Now see that issued at par to Mukesh, which he paid rupees 25 per share. That means of what? 400 into 25 will go to our forfeiture. And non-payment how much should be? 2 calls in arrear. So calls in arrear could be any, first call, final call, any. It is not mentioned here, so directly I am writing here calls in arrear. So how much calls in arrear should be? 400 into 35 rupees. So 400 into 25, how much should be? 100. That means 10,000 rupees. and here should be remain 14,000. So share forfeited for non-payment of shares of 400 at the rate of 35 each per share. Also you can write. I hope understood.